first half of 2022 and what a year it's been and what a week it's been, actually. Let's start with Omar Najee, Global Head of Derivatives at BB Energy. Good morning, Omar. Just to get your thoughts to start with on the markets, not much has moved really in the last week. My question to you is, where do you see the second half going? And do you think that a lot of the inflation talk, recession talk has been absorbed, or do we still have more sort of movement to come?
No, I think we have a lot of more movement to come. I think basically on oil, I think we need to go lower before we go higher. And I think the same on US equities. But no, I think so we're kind of in the middle of the opera. People are starting to kind of, nod off a little bit and they need a snack to keep awake and stuff. So that kind of stage. But I think the fat lady is going to sing in the winter, I think in a big way. I think it's going to be like a scream. So I'd wait to see that kind of crescendo in all markets come the winter.
Okay, and let me get your thoughts while we're starting with you on the news over the weekend. The G7, of course, are meeting. We'll discuss a few things about what they're talking about, but this price cap that's being talked about now on oil, can they realistically put a ceiling? And will they get enough buy-in? I want everyone's opinion on this. I'll start with you, Omar.
So the G7 is led by Biden, who's basically finished as a US president, so you can forget about him. Macron's lost, control of the French parliament, so forget about him. And the rest of them, basically, Boris Johnson wants to show his pecs or his man boobs or whatever it is, basically. So it's a complete. I was laughing when I saw, they want to put in a price cap and they want to do this. It's the same thing. So they've shot themselves in both feet. Now it's both elbows, and I wouldn't be surprised if they shoot themselves in the head next. But ludicrous is my opinion on the G7.
Okay, well, Dr. Raad Al-Khadeeri, Managing Director of Energy, Climate and Resources at the Eurasia Group. Raad, thanks so much for joining us again. Great to have you back. Let's get your thoughts, first of all, on this price cap. Is it just a desperate move? And do you think it could ever work? And then we'll go and delve in a bit more into anything else. But from a sort of international cooperation point, is this just reeking of desperation and just showing strength? Can it ever actually be implemented?
Yeah, it's great to be here. I think it says a lot about the debate that the US and some of the G7 countries are going through in terms of how to focus and how to sort of manage the issue of Russian energy exports. I think they're faced with a quandary. The early moves were to carve out energy. Then there were moves to target energy. And particularly with some of the moves that the EU have made and the insurance ban in particular that the EU has proposed and wants to put in place in December, I think there's suddenly a realization that the measures that have been taken sort of not only can be circumvented by Russia, and in case of the insurance ban, if it comes in, obviously puts more pressure on Russia to divert flows, but ultimately risks sending oil prices higher when the G7 want oil prices to be lower, and that's the tension you're seeing. And I think that's the essence of the debate. Janet Yellen has proposed this price cap. It's not clear how it would work. I agree with Omar. I don't think that there's any sort of real sense to it, unless you could get global buy-in, in which case the Russians could just take their crude off the market. But there is I think it is indicative of a debate and a schism really between the US and the EU over how to manage Russia and how to manage Russian energy, with the US being much more cautious, again, for domestic political reasons and concerns about oil prices. The US being cautious and saying, look, that we'd like to find something that hurts Russia but doesn't take barrels off the market and therefore hurt us. And that's where you are. Will it work? I think it's very difficult to see how it works unless it's simply contained to the G7 countries and anyone that signs on, and other buyers of Russian crude therefore use it as a baseline to negotiate price and essentially to go, well, you can't get full prices worldwide. So if you're selling to us, you need to continue the discount.
better discounts elsewhere. Thanks, Rad. Peter Maguire, CEO of Exim Australia. Welcome, Peter. Let's talk to you a bit about metals and a big sort of turnaround last week. Recessionary fears, suddenly everyone waking up to those supposedly, and supposedly that's the reason why we saw a bit of a hammering for things like copper. Again, same question to you on that. Why did we see what happened, and where do you see that carrying through for the second half of the year?
Well, good morning, Diala, and greetings from Sydney to my fellow panelists. Yeah, I looked this morning, and really the one, I think, commodity that stands out as far as a washout would have to be the tin market. It's fallen 50% in the last couple of months. So here we are at the end of June, and I think in March it was nearly at 48,000. Now it's at 24,000. So it had a crash out Friday, spanked down 9%. But yes, copper's weaker at 8,300 a metric ton. You've got a number of those other base metals, aluminium and zinc, really hit hard. Big push downs. And the recessionary fears, as you mentioned, that's the whole storyline. And weaker demand, the Chinese story, who's going to be buying goods, and that's the fear factor coming into the market, stagflation, inflation, and the next 6 months I think could be very wild and woolly. I've listened to what Dr. Rad mentioned, and certainly my dear friend Omar, and there's a lot of conjecture out there. There's a lot of fear on Main Street, and Wall Street's not sure how it's going to manage with that forum coming up on Wednesday, the big three. We've got Powell, Lagarde, and Bailey. Maybe they're going to be the three musketeers.
But I mean, it seems that this fear of recession, at least when you look and read the news the last week, it's as volatile as prices, really, in the sense that now we're already hearing, at least the media, saying, oh, that fear is dissipating a little bit. We've kind of gone through our recessionary fear, and the only way really is up from now, especially as we go through towards the end of the year. You mentioned China, Peter. How dependent are we on that China resumes its exports and imports, and to get the sort of metals commodities story back on track?
Well, it needs buyers on the other side, Diala. So it needs someone somewhere to buy something from China after those finished goods are manufactured, supply chains, what's happening as far as the linkages with shipping and how quickly they can turn these goods around. But it needs a strong consumer to say, hey, I'm getting a wage rise. I've gone from $28 an hour to $40 an hour to match inflation. So that's the cost as far as when you're seeing, these headlines, pork prices, beef, eggs, you name it, across pretty much the world, costs are going up tremendously. So if you haven't got wages coming up, who's going to buy those finished goods coming out of China? There's the first part. And I made a point of that Financial Times article. We've got the Goldman Sachs doubled the risk of US entering, and it was on the weekend's edition, the US entering a recession from 15 to 30% over the next couple of months, and they're saying it could be 50% chance of a recession over the next 18 months to 2 years. So that's sentiment. Sentiment is what really fuels a trader, and I think there's a lot of fear out there.
Yeah, but what you do hear is people sort of absorbing that already, and everyone is saying there's going to be a recession. Markets are going to take more of a correction, but nothing near what we've seen in the past. Rad, just back to you. Let's talk a little bit about back to sort of country relations and geopolitics. A lot of news over the weekend, and ahead of that, the main one being that we had Russia and Iran meeting, and Russia apparently changing its stance on being flexible on Iran's nuclear future, first of all, and lending support there. So to give us your analysis of that, first of all, and more importantly, what impact that has on Russia's relations with this region, the Gulf and OPEC Plus.
I think Russia is playing a spoiling role at this moment in time, but that's sort of indicative of Russia's desire to sort of make sure it has friends internationally. I mean, I think there is a sense, and I think the Russians have picked up a sense that, the invasion is looked at very differently in different parts of the world. And Russia and Iran, in some senses, are becoming strange bedfellows. both pariahs, both isolated, both facing sanctions, very tough sanctions. And I think what Russia's trying to do is reach out and show that it has influence and show that it can be disruptive. And that's the message as much as anything else. Russia's interference in February arguably disrupted a deal that was almost ready to be done. So, we're back to the issue of, can you have a deal right now? Fundamentally, the deal is going to depend not on the Russians. It's going to depend on, can the US and the Iranians actually get their own houses in order enough to reach a deal? There are certainly sort of countries certain players on both sides and senior officials on both sides that want that deal. But the question is, can they deal with their opponents domestically? And, there's nothing that's really changed there. I think going back to your point about markets, that just adds another level of uncertainty. Markets are, will bounce around. You're already seeing the volatility playing in. In terms of Iran's relations with this region, I think, they don't change fundamentally. I don't think Iran will necessarily walk away from talks with the Russians thinking, okay, we can go ahead, we can ignore the deal. I think there have been many in the Iranian leadership who felt that already. And, we'll watch Biden's visit to the region as a potential sign of the US reaching out to try and calm some of the fears in the Gulf. So I think it's just another element of that uncertainty, and will add more volatility to how markets see things.
Okay, but I mean, that's Iran's relationship with the region, and we know what that is at the moment in the Gulf. But part of this JCPOA discussions, the Gulf countries have made it very clear they want to be involved this time round. They have been involved. And it's really more about a question about the Gulf's relationships with Iran, but in the context of Russia as well. Russia is part of OPEC Plus. Again, is the GCC, are the GCC OPEC countries willing to take whatever Russia does? They want to keep them in the group, and they don't mind what they're doing with Iran. I mean, where does that place Russia GCC relations?
I think to borrow slightly from Omar's analogy, I think what you've got is a mass ball taking place with a lot of people dancing around, swapping partners, and sort of changing depending on the music as it plays out. And I think for the GCC and Russia has obviously sort of been, Lavrov has been to the region. Was a very, very prominent player at the last GCC conference. I think, for the GCC, there's been a great deal of importance put on OPEC Plus, and Russia has, felt the benefit of that. So I think, what Russia will do is try to manage its relations, but it's there. Look, part of this is just turning up. For Lavrov, this is sort of being there, being seen there, and sort of putting themselves in a position to remind, as they would like, I think what Russia would like to remind the world, that it can be, at the very least, a disruptive factor, and therefore shouldn't sort of simply be seen as an isolated and weakened power that can be ignored.
Omar, you mentioned that the winter is coming, and that's when we're going to see support for the energy markets. But what risk factors are there for oil in the second half of the year? I mean, it's all looking supportive from your point of view on the whole. Is there any risk factor there?
No, I think
prices.
No, I think basically, we're heading to at an eventual point, basically higher oil prices, lower equity prices, a fall in the euro, a fall in the GBP, a fall in the yen. The US dollar basically trades against them in DXY, so that goes up a little bit, but eventually, dollar loses its reserve status, et cetera, et cetera, et cetera. I think the BRICS are going to expand. I think it's going to be BRICS Plus. Putin's already saying that they're going to have a reserve currency of their own based on a basket without having a central authority like the Fed. And I think that what you're seeing is the complete opposite of what I'm hearing. So I see the West, the EU and the US as being separated from the rest of the world. So the West versus the rest. So in the old days, the West used to trade, quote unquote, paper for commodities. And that's not going to happen going forwards. So it's going to be very interesting because the mindset, I think, is fixed. And we've never seen this before. And it's going to be very interesting to see, what happens going forwards. And the main thing is politically, the West is disastrous. So Biden doesn't look secure. Europe doesn't look secure. You're having protests already now. We're still in the winter, summer, let alone the winter. People talk about recession. Real income is going down the toilet. I mean, what is that if not recession, right? And you've had that for a very long time. You have basically inflation at 10% CPI. You have inflation into factories at 20-30%. So, the fact that you're isolated and declining power and rising power, I think it's an absolute disaster. And it's like somebody running full speed and will discover a wall and you're going to get a smash. And I can already hear it happening. So I think you have to kind of factor in all that stuff. They're hopeless. I mean, they've gone to Venezuela. They've tried Iran. They've talked to everybody and their brother. They've come to the region. And who's going to do a deal with them?
Yeah.
Nobody.
And I mean,
nobody. And then
supposedly, when we see demand drop and recession really kick in, then they may get their wishes and they may not be so desperate to sort of put.
There is no recession. There is no recession.
Well, let me go to Peter with your West versus the rest reality and talk a bit more about that, Peter. The impact on the currency situation on the US dollar in terms of that polarization that's deepening as we see it, and the East. The rest getting stronger, supposedly, because they have all the commodities, etc. So the impact of that, this new world order, if you like, on equities and commodities, and again, second half risks from your point of view. I know there's so many uncertainties, but what direction would you see that going? Or the year ending, let's say.
Well, the first half, the other has been on fire. It's been electric. So every trader's rubbing their hands with glee. All you had to do was short the yen. Have a look at what happens as far as pound and certainly the euro. So there's three to work off. The king dollar has been dramatic. Are we going to see that continual uplift? I think there'll be maybe a 106, 107 handle. You're currently at 104 for the US dollar index. Let's see what Mr. Powell's prepared to do in the next, well, he's only probably 2.5 to 3 weeks away from giving us a headline, what's happening in July. So are we going to see another 75 basis points, or does he go all out and throws it up 1%? Who knows? So we're sitting here, I think from a currency trading perspective, the line in the sand for the yen's got to be possibly a 145. We've got numbers coming out from the Tankan this Friday. I'm curious to see debt to GDP numbers. We understand Japan's running at 300% approximately, US at about 130%. Just for the record, Russia's at 14%, so it's not in a bad position. And that US dollar index, I think, will probably come under some firepower and sell off maybe in the next 8 to 15 weeks. And we've got the midterms coming in at the end of October, start of November. So it's going to be nothing short of dramatic over the next 3 months, what happens as far as US. And if it works on my dear Omar's suggestions, then it's going to be game on.
Rad, just let's go back to Russia. And how much impact has its economy felt so far? I mean, there's a lot of debate about, obviously, we've seen the ruble strengthen, we've seen it still able to export its oil. The gas situation, obviously, it's using that as a political weapon going forward. How much are we going to see Russia's economy suffer? And politically speaking, how might that impact Putin's position?
I think, as you point out, at this moment in time, from a pure sort of finance point of view, Russia's been doing pretty well. I mean, it's been able to sort of redirect flows. Critically of oil, it's getting potentially less than it would on sort of, it's having to sell at a discount, but that discount's starting from, $110, $120 a barrel. So it's not a bad place to start from. And I think, on the sort of gas side, clearly there's a sense of financial well-being in the short term to say, you know, we can use gas as a weapon. We can sort of live without that. We can live without that revenue. I mean, the sort of projections have been for a 10% contraction that it will start to kick in. You know, I'm not sure that Russia's actually felt that so far. Sort of within the domestic economy, there are some signs of strain. You sort of may get sort of a default that on foreign debt that I think, you know, that will sort of play into markets. But Russia has moved to the situation that all countries that have faced massive sanctions move to, which is an ability to move onto a war footing. And, you know, it's why sanctions are such blunt tools. And in terms of, you know, you were talking about in terms of the political impact, that hasn't sort of seemed to sort of push through. Is there any sort of less opposition to Putin than there was before the war? Probably not. But similarly, there aren't sort of major signs of a lot more opposition. And so, you know, that kind of reinforces the status quo, and I think gives the Russian government a lot of room for maneuver in the short term. In the longer term,
Yeah.
you're going to see, I think, some of these issues start to kick in. And, you know, you'd have to watch oil production very closely and to see sort of how that could be sustained over the longer term. But if you're talking about the next 6 months, there's nothing there that immediately signals that sort of Putin needs to act.
Okay, and just talking about oil production, one of the headlines we have is specifically the JCPOA. You know, can it be revived? Can it not? And are we going to possibly see Iranian oil officially back on the market? Rad, give us your thoughts on Biden's visit coming to the region. What does he want to get out of it? And what's going to happen also possibly to the JCPOA? Could we see an outcome for that? Before you answer, let's just look at that question today. Can Russia continue to enjoy geopolitical partnership with Saudi and the rule of OPEC Plus, while at the same time, you know, carrying on with supporting Iran on its pathway to nuclear weapons? So there you go, related to what we talked about already and what I've just asked you. So yes or no, you know, Russia playing the game between the Gulf and Iran. But Biden's visit, what do you think, if anything, he's going to get out of it? Where's the JCPOA going? Is it dead?
Yeah, I think I tend to sort of side with Omar in this in terms of Biden's visit. It's a sign of a certain amount of desperation. Now, I wouldn't sort of underestimate the extent to which it reveals divisions within the U.S. administration itself and within national security circles in Washington, particularly regarding sort of how the U.S. should reach out to deal with Saudi Arabia. Should it be values-based or should it be interest-based, and whether those interests and values align? And quite frankly, I think what you've got is a more realpolitik approach, an understanding that you need to deal with Saudi Arabia. It's there to stay. The Crown Prince is there to stay. And it's going to be a very important element in terms of regional stability. And for the US, issues like Yemen, issues like sort of fundamentally coming up with Plan B if the JCPOA doesn't happen, etc., are all important. Oil, oddly, is probably sort of the least important strategic issue, although it was the factor that probably tipped at the balance, or at least allowed those in Washington who wanted Biden to sort of shift the relationship to actually consider that. But I don't think you're going to get anything significant out of that. And the administration has been very quick to signal that this is not an energy visit. You know, in terms of the JCPOA, look, I think the sort of odds still are that it doesn't happen. And I'm not sure that Russia's visit changes that one way or another. It goes back to what I was saying. This is about alternative dynamics. And for Russia, it can fudge things. I mean, you know, essentially, I think the headlines have been, you know, it's willing to live with a nuclear Iran. Let's face it, if you don't have a JCPOA, you're probably going to end up on the road to a nuclear Iran. And so, you know, Russia hasn't necessarily sort of stepped in and sort of diverted everything, just simply because, you know, as far as these renewed talks go, yes, it signals probably more that neither side is willing to be the one that says this is ended. I mean, it's like a really bad marriage where they just can't agree on a divorce, and that's where we are.
That impact the region here, the GCC? Can the GCC carry on with its plans, economic plans, while it has a officially you know, sanctioned nuclear Iran? I mean, we haven't had that yet, right? So,
I don't think it necessarily means. I don't think it necessarily means a sort of a nuclear Iran. I don't think Iran goes the way that North Korea does. You know, Iran gets to breakout capacity. That's fine. You know, will the Iranians? Will the Iranians move to suddenly do something more egregious? I'm not sure they need to. And I'm not sure they want to. So, you know, Iran also sort of lives in the region. So I don't think this is necessarily this that suddenly sort of crossing the Rubicon on this. I think we crossed the Rubicon a long time ago. So this is going to be sort of, a matter of degrees if you don't get a JCPOA, as opposed to sort of, a complete U-turn.
And maybe a bigger agreement amongst everybody, including Israel, going forward, and Iran. Maybe that's what they've got cooking. There's the answer to our question: can Russia? Yes, it can. I put yes as well. Seems to be getting away with everything that it wants to. Peter, let's have a look at the week ahead. We've got a few minutes left. Any stats to look out for? Any further sort of impact on the market from last week? Everything was looking green on my screen this morning when I put on Bloomberg. Do you see that sort of revamped sort of recovery euphoria in the equities markets? What's week ahead? Anything to look out for?
Well, Diala, it's been a fairly strong day if you're looking at numbers across Asia Pacific today, building on New York close on Friday. So from a sentiment point of view, Australia's up nearly 2%, and a number of those other markets have been bid up strongly. So the majority is a sea of green and big green. So that's a good point starting in. Where we move from here, maybe that momentum may continue over the next couple of days. We've got big numbers, as I mentioned earlier, the forum with the three of them talking on Wednesday. You've got the situation numbers coming out of China. We've got GDP numbers, I think, coming out of Canada Wednesday, USA numbers. So the overall, there's an avalanche of data. We've just got to see how it falls, and that'll give us a pretty good headline as far as sentiment from Main Street, inflation, recessionary fears, and everything else thrown to the pack of wolves. And I feel as though that was strongly bid up for US crude, and Brent on Friday evening came off a couple of bucks today in Asia trades early. So maybe there's a little bit of profit taking there, but I wouldn't be surprised to see that back up and whipsawing like it has, goes down to about 103 and back up to 120 or 105 to 120. So yeah, hold on to your hat. It's going to be a rough ride.
Omar, on the oil price, you said it's still got to go down before it starts to go up again. Where would you put the floor on that in the next quarter? Oh, we can't hear you. You're on mute.
$90 on WTI. I need to see this market kind of, you need to have, it can't all just be one way. So I'd like to see this market dip towards 90. It doesn't have to be exactly 90, but I'd like to see the summer kind of cool things off, even in front of the driving season, even in front of the hurricane season. And so that people kind of digest all they've eaten and get an appetite to buy again. For me, I don't think we'll see these new highs until we get into Q4. So I'd like to see this market come off a little bit. On equities, I think we're gonna fall this week, and I think we're gonna fall hard this week. So I'd be very careful, depending how, short-term investing or whatever it is. Don't get sucked into these. I'm looking at the S&P. Don't get sucked into the S&P right now, because I think it's done. Yeah, I think it's done what it had to on the upside. It came off a lot. It filled the gap. So you might see a big move to the downside this week. So just wait.
Okay, and on oil, you had a month ago or less said you see it hitting 150 this year again. So you still see a $60 price. Is what you're saying.
Yeah, we have to remember that oil prices, like equity prices, we're not trading value. We're trading geopolitics. We're trading bans, and we're trading sanctions, and we're trading all the rest of it. So I think this winter you're going to see Europe do without gas. I think you're going to see massive. You have to understand that. I mean, it's amazing. Europe has said that, and the US has said that we want to obliterate the Russian economy, and we want to completely destroy it, right? And Russia is not going to basically sit idly by and say, yep, absolutely. So they've already reduced gas flows 60%. And I think this winter, you're going to see it go to zero. So Europe and the US that was saying that everybody in the East was bad because of, they're burning, I don't know what, and climate change. Europe is burning coal now. Europe is going to burn whatever it can. So all that hypocrisy about, we love the planet and Greta, Thorn, whatever it is, Berg, whatever it is, but 18 years old and knowing what's good for the world, she's shut right up now, right? And so the rest of Europe, they're burning coal. So yes, I think basically that come this winter, Russia's going to do like they did with the rubles. They're going to start sanctioning the US and Europe, whether it be on supplies to nuclear power stations, whether it be on gas, whether it be on oil, whether it be on neon, whether it be on metal ores, all the rest of it, grains, everything. I think it's coming. I think we're going to see a really interesting thing where the G7, might actually take all their clothes off, for a bit of gas, maybe.
Dr. Raad, I'll let you have the last word and wrap this up for us. If you can address that gas situation in terms of, Europe is trying to wean itself of everything right now, right? In terms of, expecting more to come from Russia. Have sanctions have worked so far on Russia? Yes or no? And do you see an end to this war by the end of 2022?
Certainly not an end to the war by 2022, possibly a stalemate. But I think this war goes on for many, many years. Have sanctions worked? And, Russian oil still keeps flowing. And given how much that is as a percentage of Russian revenue, that's got to be sort of the key indicator. On the gas side, I agree with them. I think it will get cut off. I think Russia is increasingly being willing to use its energy as a political tool, and it sat back for a while and didn't, and now it's changing its mind on it. So that is a real risk, and it knows that it can impact Europe in that way. But ultimately, as far as this war is concerned, I suspect this is a war that's going to go on for a long, long time, even if it sort of turns into sort of more of an insurgency than the conflict you're seeing right now. Okay, well, that's not a great point to end on. And we have seen the conflict is that, Russia did sort of start to bomb a few targets in Kiev, having had a bit of a lull for a few weeks. So obviously stops and starts. Thank you, Raad Al-Khadeeri, Omar Najia, Peter McGuire. Thank you so much, everyone, for joining us this morning. Have a great week ahead.
Thank you very much, Diala.
Thank you, guys.
Thank you very much.
Thank you.